In this video, I will quickly discuss capital flow and technical analysis. This is the third part of the series we have been discussing on capital flow, and this is where you are going to bring your understanding of capital flow and fundamental analysis and sentiment analysis into trading. Now, for you to trade capital flow, or for you to use the understanding of capital flow in the market, there is need for you to understand how it plays out on the chart. Now, the chart now is what we call the technical analysis, where you see is either you are seeing the candlestick or you are seeing the line chart. Now, I'm going to quickly explain the possibility of capital flow. When there is capital flow, of course, the market will move in two different patterns. Pattern, I mean, is either the market is trending or the market is ranging. Now, these are the two possibilities in the market. Now, when there is a significant capital flow in and out of a currency as compared to another currency, that is when you notice that the market will be trending. And this is where you really want to trade. Now, capital is still flowing when the market is ranging. It's just that there is no significant or clear direction. And that is where it is very important for you to analyze the fundamental and the sentiment before you come to the chart. Now, we are going to paint two scenarios, and I'm going to use a live example to explain how the technical are play in terms of capital flow in the market. Now, let's see a situation of risk on. This is a situation that there is a risk on in the market. Now, when there is a risk on in the market, the fundamental divergence is what will be ruling the market. So your focus will be on looking at the divergence in the fundamental indicators in the market as it relates to your choice of currency pair. Now, in this case, now let us pick two currencies. Let's say GBP, NZD. Now, as at that time, in fact, you can check the chart to confirm what I'm trying to explain. If you have access to any chart at all, you check the chart between December 2024 and May 2025. Now, there is a risk on. So if there is risk on, your focus will be on the fundamental divergence. Now, what do I mean by that? You will have to, among other things, you will have to establish what is the interest rate for the maybe the base currency now. Now, as of December, between December and now, the average interest rate for GBP was 4.5. Now, for NZD, the average interest rate was 3.5. Recently, GBP interest rate, there was a cut by 25 basis points, but on the average between December and this time, the average interest rate was 4.5. Now, in the fundamental analysis, you are expected to pinpoint the presence of divergence. The divergence means the difference between the interest rate of the base currency and the interest rate of the quote currency. In this case now, we have 1% as the interest rate divergence. Now, this interest rate divergence is what we expect to initiate the capital flow from NZD to GBP. Now, because this is a divergence, and from the fundamental perspective, when you get to the chart, what you are expected to see is that GBP as related to NZD will be on an upward trend. Now, I said that the market can only move in two patterns, whether it's trending or it's ranging. So, is either the market is trending down, or is ranging, or is trending up. You see that? Now, what played out for GBP NZD? because the divergence in the interest rate fundamentally supports that there will be capital flow from low yield currency. In this case now, this is low yield as compared to GBP, because the interest rate is 3.5, while the interest rate for GBP is 4.5. So capital is going to flow from this currency into this currency. Now look at it now. On the chart, what you will see, if you can have access to any chart, go to GBP NZD. Between December and now, which is May 2025, December 2024 and May 2025, you will notice that there was a clear upward trend for GBP NZD. Now, I want to show you how you are to position yourself technically to be able to leverage on your understanding of capital flow and take some profit for yourself. What you are expected to do is, after you have confirmed that of a truth, the fundamental divergence is playing out in terms of clear direction on the chart. Now you want to wait for the market to come to where we call key zones. Key zones are zones that formerly they function as a resistance on an uptrend. Now, formerly that zone, there was a resistance pool of fund there. Now that the market is in an uptrend, we want that zone to function as a support zone for us. That is the key zone you want to wait for. This might sound so simple and logical in the theory, but the truth is, traders find it difficult to position for trade like this. Now, when you wait for the market to price into the key zone, within this key zone, there is what we call liquidity clustering. Liquidity clustering. This is what you want to leverage on. There is a cluster of liquidity. What I mean by that is there is a cluster of money. So when the market price into the key zone on a clearly defined uptrend and the resistance is now becoming a support, you want to wait for the market to give you price action. This is where understanding price action becomes so crucial. You want to wait for the market to give you price action that the buyers, they are already in the market, and all you have to do is to trade each of these waves, whether it's on a daily chart or on a weekly chart or on a monthly chart. You want to trade each of these waves. There is a way you position yourself and you look at the price action such that you can enter the market somewhere around there and you take your ratio 1:6 according to our trading system. Our trading system guarantees that you get ratio risk to reward of 1:6 on every impulse move that you are able to bank on. And that is because before you come to the technical, you have already ascertained that there is a fundamental reason backing this upward movement in a risk-on environment. Now, let me paint a picture of a risk-off environment for you very quickly. And that picture is, let me look for a currency pair. Let's say maybe we are looking at AUD JPY. Now, when there is a risk off, capital will flow from high yield currencies into the low yield currencies, or what we call safe haven. Now, if you still check this between December and May this year, December 2024 and May this year, 2025, you will notice that what played out for AUD JPY was a clear downward trend. Now, as at March, April, what happened to the market was that because of tariff war between USA and China, there was a shift of sentiment from risk on into risk off. Now, because we are now trading AUD JPY, one of these currencies is an high yield currency, while the other one is a safe haven. Expectedly, the price is expected, or the capital, I mean to say, is expected to flow from the high yield currency into the safe haven. And if you can check any chart, you will, and you go to December, between March 2025 and May 2025, you will notice that because of the risk of that the tariff policy shift triggered, there was a clear downward movement for AUD JPY. Now, the same way you wait for the market to price in into a key zone, you will still do the same thing for this downtrend. As the market move down like this, you will wait for a previous support zone to turn resistance, and that is what you want to leverage on, and expect a price action that will show you that of a truth the sellers are in the market. Then you take a position and ride the wave. This wave will also give you ratio 1:6. Any point in time, any clear wave, we guarantee will lock in on the average of ratio risk to reward of 1:6, and that is how we trade at Potential Miners International, to bank in consistent profit for ourselves and our traders. I want you to check the description of this video. You will see the summary draft of our trading system. Go through the summary draft if you really want to start this journey. Thank you for listening. God bless you.